We keep track all day long of all of the markets here on the Market Day Report. The corn market on the lower side we're almost to mid-session. And we've got the March corn down 3/4 at 379.5. December down 3/4 also, but it's at 402.5. That's 3/4 cent off of the low. Over in the soybean market, we went just a little bit higher. We went sharply lower. Got as low as 915 3/4 in that front month contract of March. Now we're down 2.5 at 922 3/4, but we've got almost a 10-cent trading range, 9.25 cents to be exactly. And then you go out to September, we're down 3.5 at 954.5, 4.5 cents off of the low. March Chicago wheat down 1.5, 518.5. July down 2, it's at 531, 2 cents off of the low. March Kansas City wheat down 3.5 at 506, and the July down 3.25 at 526. And the March Minneapolis wheat down 1.25 at 573.5. July down 1.25 at 582.25. What's going on in the cotton market? March cotton down 80 points, 73.33. New crop December down 43 at an even 74 cents per pound. Well, let's say hello to Scott Gecas. He's at the edge of the trading floor, and he's with Prosper Trading Academy. Scott, first of all, the news that we're going to start getting some of this government information that has been missing over the last 5 weeks. What do you think of this?
Well, that's the biggest. This is going to be a huge week just for markets in general. You have a bunch of earnings coming out with the stocks. You have all these economic reports that have been delayed for some time. Some of these reports are going to be coming out on Thursday. Right now, the volume is a little bit on the lighter side, even with the big range that we had in soybeans. But everyone's going to be focusing on the headlines and what's coming out. Option volatility is a little bit elevated, but surprisingly enough, it's not as elevated as you would think with all the news that's going to be coming out this week. So we're going to be in a wait-and-see period and see what the headlines are going to say.
World supply and demand estimate. How do you see that coming together then?
Well, the supply and demand estimate is really going to be tricky. So with everything that's been going on, China especially, they bought 5 million tons of soybeans, expected to buy more. We're going to see what comes out of this trade war talks, and that's going to be the biggest significant factor as far as going forward.
How significant do you think that these world supply and demand estimate numbers are going to weigh on the market?
Well, it just really depends on what the traders are going to position themselves. If we have, you have the expected range. So if we have a blowout to the upside, then it's going to be positive. If we have a blowout to the downside, then you're going to see the big spikes. But if it comes in mid-range, then we expect a sideways movement.
What about volatility through all of this? Will it be heightened?
Well, right now, walking into this week, you would expect volatility to be elevated to an extreme point, but it's really not. With soybeans, you're only looking at about maybe a 3-point difference versus the 20-day historical average. Corn's a little bit around the same, 3 to 4. The biggest move in the volatility as far as implied versus 20-day historical is in the wheat market, which is about between 7 and 10 points higher.
All right, Scott, hold on with us. We'll talk about the livestock trade coming up next right here on the Market Day Report. Don't go anywhere. Well, let's go to the live cattle market. This market has been on the higher side from the get-go. First thing here this morning, we've got that front month of February up 45 at 126.50. April fats are up 50 at 127.35, and June up 40 at 117.10. Now, in the feeder cattle market, we've been higher over here also. We've got a new front month coming up here, March. It's up 90 at 144.53. April up 90 at 145.63, so a dime higher, $1.10 higher than the previous month there. And the May up 88 cents at 145.95. Then when we go to the hog market, that's where we see some weakness here, with February down a nickel at 58.33. April, though, up 45 at 62.58, trading in a different direction. Got as high as 62.77. The May is trading down 30 cents at 68.60. Back at the edge of the trading floor, let's visit again with Scott Gecas. Scott, what's the volume been like here in the trade here today?
Well, with a rough commute here in Chicago, and everyone's having a really hard time getting to and from. Trains are late, cars are just not starting. So the volume here is a little bit light. The floor here is about 65% full. So we're looking for this whole week to be a little bit on the light side as far as that goes. Just with the cattle market in general, we keep seeing that bounce off that 125 level. The funds are definitely increasing their long position. You've seen about an increase in the open interest about 40,000 contracts within the last 5 trading days. That's very significant.
What about, we were just talking about volume. Will these government reports starting to come out, do you think that could increase this volume of people wanting to get back into this market in case there is a move one way or the other?
Yeah, 100%. Everyone's going to be watching these headlines coming across with the delayed reports. Traders are looking for some inclination of which way to go. So without that data, everyone's just playing guessing games. That's why the volatility has been heightened a little bit more than usual, just because no one knows which way it's going to go. So right now, especially with the cattle market, we're keeping an eye on that 125 level. It's been a key support level. It's been bouncing off our last few times with big volume, not just a little bit of volume, but every time it touches that 125, you see a little bit of spike up with an increase in volume. Now with the Go ahead.
Go ahead.
Well, now with the hog market, it's on the other side. So the support line was 60. So we broke that 60 with that big gap lower on Friday, and we're going to still remain bearish. And you can see the option market, it's being very active to the put side. The 56 puts today alone have been very active. So we're going to keep an eye on that and see how that's going to play out.
That's exactly where I was going to go with that next question, Scott. Well done. Scott Gecas, he is joining us from the edge of the trading floor there. Scott, be sure and stay warm. All right, let's find out what these new